one could argue that core advertising is still challenged. The reason that they reported the 17% increase in advertising revenue in the first quarter was really all driven by the Super Bowl telecast. That said, I mean, if you kind of looked at their streaming business, we did see a pretty good momentum there in terms of subscriber numbers. We did see some progress on profitability, which is not to say that it's actually profitable, just that the losses were a little bit better than what we were expecting. But overall, I mean, this is right now, as Paul kind of pointed out, this is peak uncertainty at Paramount right now. We don't know what's going on with ownership. We don't know what's going on with leadership. We don't know what's going on with strategic direction. So it's all up in the air.
So, Geetha, I guess one of the big questions on any change of ownership is what are they going to pay per share of the buyer? And are they going to pay the same price for Sherry Redstone's controlling shares, the super voting shares? Are they going to pay the same for those shares as they will for the plain old shareholder shares? So how's that work?
Yeah, they're not, Paul. And that's kind of been the whole bone of contention, right? So the whole Skydance proposal is kind of this very convoluted offer. It's this two-step proposal where they basically pay out Sherry. Her interest in Paramount is worth something like about $850 million. They're going to pay her upwards of about $2 billion. So she's getting a nice pocket of change there, but it's basically diluting everybody else. And that's why you have all of this shareholder consternation. Of course, Skydance is kind of addressing that now. They have sweetened the bid a little bit. They've thrown in about a $3 billion cash infusion to pay down debt, to buy back stock. But I'm not sure if that's going to be enough.
Do you feel like this is the best and final offer from Skydance as we get to that Friday deadline?
That's what they have said, yes.
Okay. Did we learn anything from the numbers yesterday that shows what a buyer should be paying for shares?
So we do have another concrete offer on the table, one that Sherry Redstone rejected. This was the offer from Apollo, which basically offered, $12 billion for the equity of the company versus what it's currently trading at, which is about $8 billion. So roughly about $19 to $20 a share. So that's kind of where the Apollo deal stands. Of course, now there have been rumors that they're partnering with Sony to again take that bid up a little bit. But when we kind of did a sum of the parts analysis, we think that this company is easily worth upwards of $20 a share.
Yep, I've seen that. So, folks, if you want to check out that research analysis, you can go to BI, go on the terminal, and search for Geetha's work. They did a lot of valuation work on Paramount. A lot of investors are looking at that work as well. So, Geetha, Friday is, I guess, one kind of date to keep in mind, but it just seems like with this dual class of stock and maybe different prices being paid for different classes of stock, this thing's going to end up in court. It just feels like. What are most people thinking about this?
I think it definitely there's a very, very high probability of litigation. I mean, it's not probability; it's almost a certainty at this point. Everybody has said, all the big shareholders, including Mario Gabelli, has said that they will definitely litigate if Sherry Redstone actually goes through with this deal, a deal which does not treat all shareholders equally. And this isn't something new, Paul, with Paramount. I mean, we've seen this litigation stuff happen over and over again. But it definitely is a huge risk, and it's going to be interesting to see what Sony and Apollo kind of come up with in the meantime.